Thank you, Ernesto, for taking the time again to share your views on these quarterly results. I would like to start with toll roads. 407 ETR keeps showing the positive trend that we saw in previous quarters. And also in terms of dividends, they have already distributed 300 million Canadian dollars, but have recently announced an additional dividend of 650 million for the next quarter. This is a higher amount than previous year and close to pre-pandemic levels. What can you share here?
Yes, thanks, Silvia, and thanks for having me. Yes, absolutely. I mean, the 407 is improving. It's already ahead of our expectations. Several things are coming into the equation, right? I mean, you still have good population growth. There's also more return to the office. All that really brings underlying growth. Well, we also have some additional works in the alternative routes that have enabled a much better performance than expected. The dividend is a consequence not only of the strong performance, but also very reasonable prospects for the future. So we are very happy with that performance.
Great. And moving into the US managed lanes, we've seen another solid quarter with revenue per transaction growing across the portfolio. And I would like to highlight the performance of 35 West after the opening of the additional segment back in June. What are your thoughts here?
Yeah, again, Dallas Fort Worth keeps performing amazingly, right? So you have, as you rightly pointed out, I mean, revenue per transaction going above inflation. I mean, that's remarkable. And the 35 West, definitely the segment that we added, is ramping up pretty strongly, again, ahead of our expectations, right? So very solid performance. I mean, they are even performing above 2019 levels. LBJ not yet. LBJ is still affected by some construction works, but really the performance is fantastic. And outside Dallas Fort Worth as well. I mean, you have the I-77 that doesn't have a soft cap, is really rallying with an amazing growth. And I-66 is also performing well ahead of our expectations in revenues and ramping up in traffic.
And if we move into airports, Heathrow have shown a very good performance during the summer with traffic passengers above pre-pandemic levels. What are your views on airports?
Well, all the airports have performed really well, and you can really tell that demand for travel is there. Regarding Heathrow, I mean, the fact that it's above pre-pandemic levels is really encouraging. I mean, the airlines want to operate out of Heathrow for sure. And we also have business travel coming back and representing almost the same percentage, very close to that, as pre-pandemic levels, like 27%. Pre-pandemic was just slightly above 30%. And yes, Heathrow has updated the traffic expectations for the year. It's, close to the pre-pandemic highs with 79.3 million passengers expected. So clearly Heathrow is in a very solid performance and demand for travel is there. The rest of the airports as well performed really well.
And in construction, as we mentioned in previous quarters, profitability is still affected by the large projects that are at the final stages in the US. Can you give us some color here?
Well, I discussed most of this in the first half results. Basically, this quarter has been similar to the one last year, so profitability is improving along the year. But yes, the first 6 months were hit by finalization on some big projects in the US. We still will file claims to recover part of these costs, but yeah, they were impacted by that. So this work should be over throughout 2023. The division otherwise is performing strongly in Poland, Spain, and other regions.
And let's talk about cash. We've seen 0.6 billion of cash position at the net cash position at the end of the quarter, and that compares to 1.4 billion back in December 2022. What are the main drivers for that cash consumption?
Well, the main driver is really a single transaction that was the repayment of the hybrid bond, right? That was 511 million euros. That's the most important component. In terms of cash consumption, we are investing more than last year. I mean, we're investing more, for instance, in NTO at JFK. We're very happy with that project, and the bulk of the investment will happen between this year and the next two. So we're having some additional investments in there. On the other hand, we have dividends from infrastructure projects growing substantially, so that's good news. Then the other thing, I mean, we also had shareholder remuneration with dividends and buybacks. It's true that we are slightly behind here and we need to catch up. Liquidity has been scarce. Hopefully, listing in the US will also help with additional liquidity, but we are likely to invest in our own share early next year to make up for this shortfall.
And finally, what everybody keeps asking us in all the meetings, how is the US listing advancing?
Well, it's progressing. I mean, we're doing our best to go as fast as possible. Probably it's more likely that it will be first quarter of 24 event, but it's the SEC prerogative, of course.
Thank you very much.
Thank you.